Tech stocks almost helped Wall Street rebound from yesterday's sell-off. How investors are coming to rely on mega-cap companies like Apple, Netflix, Amazon, Google, and Facebook. I'm Emily Chang, and this is Bloomberg West. Coming up, Salesforce CEO Marc Benioff tells me he sees danger ahead for unicorns. Plus, as Netflix shares bounce in the midst of a potential partnership with SoftBank. And tech leaders fire back at Donald Trump's stand on immigration. All of that ahead on Bloomberg West. First, though, to our lead, another wild ride in the markets. U.S. markets erasing gains made earlier in the day, but tech stocks generally faring a bit better than the rest. I want to get straight to our Matt Miller in New York for the latest action at the close. Matt, break it down.
Yeah, well, you're absolutely right. You know, Apple, Netflix, Facebook, Amazon, Best Buy, these were the big winners on the S&P, adding index points or fractions of index points at the close. We were up almost 3% on the S&P at one point today after the huge drops that we've seen in the last 5 trading days. And the tech stocks helped the S&P really rally up to the close. But it's interesting, the big defensive sort of old economy companies like General Electric, like Marc, Johnson & Johnson, Wells Fargo, those companies, along with Microsoft, which some people in Silicon Valley might think is an old economy company as well, really weighed down on the index and brought us to a loss of 1.3% at the end of the day. So now we're in a situation where today is the 6th trading day in a row for drops. The Dow Jones Industrial Average was up 440 points at one point this morning and slowly chipped away at that gain until we finished down at a loss of 200. So it's anybody's guess as to what happens tomorrow. Maybe there's more selling. Maybe they think we're a little bit too pricey, but we'll have to wait and see how Asia opens up tonight. Emily?
Right. We will be watching that after a rough day in China yesterday. Matt Miller in New York, thanks so much for that. I want to bring in my roundtable of guests now. I'm joined now by Redfin CEO Glenn Kelman. He'll be here throughout the show. And RBC Capital Markets Chief U.S. Equity Strategist Jonathan Golub, as well as Prudential Fixed Income Chief Investment Strategist Tipp. Robert, I want to start with you because you know a lot about what's going on in China. But first, when it comes to tech, we're seeing Netflix holding on to gains made earlier in the day. Apple, Facebook, Amazon all ending in the green but off their session highs. Google ending slightly down. Why is tech doing well but China is not as well as the broader U.S. markets?
Yeah, the situation in China is really something that's just coming to the forefront with their liberalization of the currency. But in fact, there's been a tinderbox brewing there really for years as the Chinese currency has been linked to the dollar, which has been a juggernaut. So at this point in time, with their economy slowing down and then moving to liberalize the currency, it's created a huge imbalance. And against that backdrop of their falling stock market and slowing growth, has been very unnerving for the markets.
Now, Jonathan, you came out earlier today saying now is the time to buy. Why?
Well, first of all, I think that the underlying fundamentals here are really disjointed or separated from the markets. There's no single news item that is jolting, that should be having this kind of a jolt. And when you see other periods, if you go back, when you have this massive spike in volatility and quick selling, the market tends to snap back relatively quickly. And what's important is those companies that have led going into the downturn tend to do well in the 1 week, 1 month, and in fact for 6 months after the market turns around. So even if you miss the bottom, investing in those previous winners tends to be a winning strategy. And if you look today, that's exactly what happened.
Now, Glenn, I love that you're here because you see the big picture. You also see what's going on in the real estate market, but you also know what's going on in the private tech community. How is the volatility in the broader markets affecting you?
Well, I think there's 2 dimensions, as you said, and the first is in the housing market, volatility scares people. They worry that they should put off this big purchase when they see markets going up and down. A lot of them are selling stock to be able to afford houses. They were already concerned because we saw over the past 4 months demand really starting to falter. So the housing market has been the mainstay of the U.S. economy over the past 2 years, and it's just topped off over the past 4 months. And then in the tech markets, what we've seen is people just saying month after month, this is crazy, this is crazy, this is crazy.
This is crazy.
It is crazy, where private valuations have been so far from public valuations, especially for companies that aren't making money. And so with some of that money coming from Asia, really driving the valuations higher, I think you're going to see some rationalization where the unicorns in particular are going to be affected in their valuation.
Okay, so let's talk about that. Bill Gurley of Benchmark Capital, longtime former tech equities analyst, came out with a big warning earlier last week, and he came on the show. He talked about it a bit more in depth. Take a listen to what Bill Gurley had to say.
I think we're seeing a sentiment shift, right? We've been, for the past 12 months, if you were to judge, if you were to say, have internet investors been optimistic or pessimistic or where they are on that scale, I would argue they've been, kind of pegged to the right rail, especially in the late stage private market. And so whenever you're there, there's only one way to go, which is down. And now, whether it's the Chinese economy or whether the Fed's going to raise rates or any of these things that raise questions, they cause that sentiment to drift back towards the center.
Gurley there with my colleague Brad Stone, who is filling in for me. Do you agree that investor sentiment is starting to shift?
Absolutely.
It hasn't already. I mean, it's.
You talk to investors today who are paying more in the private markets for a stock that they would buy in the public market. The same investor would pay less if that company were public. And it's only because they don't have to mark the asset to its current valuation. And so that just creates that mentality of why are we doing this? And then when you see this much volatility in the market, everyone starts to take a step back and really think about who are going to be the winners, where do I want to invest, who's going to generate profits, because that is the ultimate dictator of what's going to be valued in the market.
Jonathan, what does this mean for public tech stocks?
Well, the appetite for growth, I think, is enormous right now. I mean, the big issue is if we are in a slower economic growth environment, whether it's because of China or other issues, which I think is the case, then the amount that you pay for a company that's able to deliver faster revenue growth should be substantially higher. And I think, in fact, healthcare companies, new tech stocks, and we could argue whether Microsoft is a new or old tech company, even innovative consumer brands, I think that these stocks are actually undervalued, even if in certain cases they're trading expensive. And a lot of these names are actually trading at a discount to the S&P, even though they have substantially faster growth.
All right, Robert, China, Shanghai index down 7% yesterday. What's going to happen when the markets open there in a few hours?
Yeah, well, we've had a break in the Chinese stock market. It was consolidating, and it's broken down. It looks a lot like the correction that we had in Chinese stocks almost 10 years ago. Obviously, they're trying to take steps more aggressively, cutting interest rates last night, cutting the reserve requirements. But it's not clear that the fire's out. There's continued to be pressure on the currency in the longer-dated forwards. And so, no clear sign of a change there yet.
All right. Prudential fixed income chief investment strategist Robert Tipp, Jonathan Golub of RBC, Redfin CEO Glenn Kelman. You're sticking with me. Now, I do want to drill down a little bit more into what's going on with Netflix specifically, because it's been one of the most volatile stocks this week. At one point yesterday, sinking 18% and closing up near 5% today. So what is going on with Netflix? Well, in the middle of yesterday's market meltdown, Netflix announced a deal with the Japanese mobile network SoftBank. It's a local partnership to help Netflix launch in Japan on September 2nd. SoftBank users will be able to sign up for the service at retail locations and pay for it in their monthly mobile bill. Also part of the deal, SoftBank will help develop original content. Still to come, my exclusive conversation with Salesforce CEO Marc Benioff. We discuss everything from education to the global market sell-off. That is next. Now to Salesforce. CEO Marc Benioff says startups that prioritize high valuations may struggle in these tougher market conditions. I sat down with Benioff for an exclusive interview.
The devaluation of the yuan and kind of the changes in the currency. Of course, you also just have a 6-year bull market. I mean, it's been an unbelievable market run. And then there has been, a slight shift in our GDP in the United States downward in the last 2 quarters. And I think those 3 things together just said, it's time for a normal market correction. But I'm still a long-term believer in the stock market. And like Warren Buffett says, you have to look at the long view.
What does it mean for Salesforce? I mean, you guys had a great quarter. What does the broader environment mean for you?
Emily, we didn't have a great quarter. We had the best quarter we ever had, and it was amazing. And, I can't believe Salesforce's performance, honestly. I mean, we're still the fastest growing enterprise software company ever. I mean, we just made it to $6 billion. We can see $7 billion by the end of the year, and I have a short-term horizon to get to $10 billion in revenue, and I'm sure that when we get to $10 billion in revenue, we're going to do it faster than Microsoft, Oracle, and SAP. And the funny thing is, Emily, next year we'll be the 4th largest software company in the world. That's amazing. And only Microsoft, Oracle, and SAP are bigger than Salesforce at that point. And then our job is to be number 3, first by market cap and then by revenue.
So no plans to sell?
Well, Emily, I'll tell you what, I've never been more excited about Salesforce. And I mean, after that kind of quarter, you can just see why I am. I'm sure everyone looks at what's happening.
So you tweeted in July, all my friends want to be unicorns. Many are just not ready. Get ready for some dead unicorns. Bill Gurley also issued some warnings on Twitter. How worried are you about everybody else? Salesforce is doing well, but what about the other guys?
I don't like the unicorn mantra. I think it's very dangerous for these entrepreneurs that they're more focused on their market cap than their customers. And I think it gets very dangerous. Of course, I invest in a lot of startups and I help out a lot of these entrepreneurs. And when I see them all of a sudden get more focused on being a unicorn than being a company with a high level of customer satisfaction, a high level of employee satisfaction, and a company that's giving back to the community, then I know it's a problem. At Salesforce, we've never been focused on our market cap. Okay, and we have a very healthy market cap at Salesforce. We've been focused on making sure that we're doing the right things to build a great business. And that's why I think the unicorn mantra is very, very dangerous. And so I tweeted that I think that we're going to start to see a lot of dead unicorns, because what I see is businesses who are raising money at high market capitalizations who are not focused on their fundamentals. And when you see a big market shift, and they are constantly coming, we saw one today, saw one last week, the people who are going to have to, really get ready for those are the smaller companies, the startups, the ones who aren't strong public companies like Salesforce. And I remember those days. It wasn't that long ago.
Yes.
We started our company in 1999. There was a big correction in 2001, only 2 years into Salesforce. And I was nervous. I remember very well what that was like. And we had to make a lot of changes in our business, and we had to double down on our customers.
I spoke to Benioff at a middle school right here in San Francisco, where Salesforce announced a $6 million donation to the city's K-12 program, its 3rd big gift to SF schools in a row. I also talked to him more about Salesforce's commitment to education.
We have not valued our K-12 schools in the United States as highly as we have valued our higher education system, for example. Everyone knows we have the best higher education system in the world. Well, we should have the best K-12 education system in the world as well. And the way to do that is very, very easily, which is all the stakeholders have to get involved. The government has to be involved. The school district has to be involved. The kids have to be involved. The parents have to be involved. Businesses have to be involved. And I think that model is really happening here in San Francisco.
So what about the rest of the businesses that aren't Salesforce? Is the rest of Silicon Valley being generous enough?
Well, Silicon Valley does have an incredible history of stinginess. And so we are fighting the tide there. I agree. But we've seen more generosity from San Francisco-based tech companies than we've ever seen from Silicon Valley-based tech companies. And you just see that across the board. The largest and most important tech companies in San Francisco are giving more than ever before. It's unprecedented. And we're encouraging not just to give money, not just to give technology, but get their employees out there and work in the schools, the hospitals, the homeless shelters, get into the community, and let's build a community here. Let's not just build a tech community.
You have everyone from Bill Gates to Mark Zuckerberg trying to reform education in their own way. How would you describe your approach? It's more of a hands-off approach compared to them.
I think that our approach, and it looks like it's a hands-off approach, which I think is really interesting, actually, because I don't think of it as a hands-off approach because we work really hand in hand, but we offer a full package. We're not just about the money, because money alone isn't going to solve anybody's problem. It's about the money, it's about technology, and it's about people.
Apple just unveiled plans to give on the order of $100 million to public schools. What do you think of Apple's plan and Tim Cook's greater involvement?
I think it's great that Apple's going to give $100 million to public schools, but I think Apple should be giving billions of dollars to public schools, and I'll tell you why. Because Apple has reaped a huge harvest from the public schools. If you go through these public school classrooms and you open up their closets, you'll find old Apple IIs, you're going to find old Macs, you're going to find old iPads. I mean, Apple has built a lot of its history on the K through 12 market, and it should be giving back in a massive way to the public schools. And I think $100 million is great, but I hope that's just a start.
Salesforce CEO Marc Benioff there. Now, staying focused on what's going on in San Francisco in this environment, new data from Redfin shows Bay Area homeowners are moving to other tech hubs. Here with me again, Redfin CEO Glenn Kelman. So there's a lot of stuff going on here, but let's drill down into what's going on in the real estate market. San Francisco in particular.
You've just run out of room.
Other tech hubs.
You've run out of room. So there's all these great companies, there's all these great ideas, the cost of living is out of control, and people are just leaving. And the fact that they can build software anywhere in the world because of GitHub, because of Slack, because of all these other technologies has just opened up the rest of the United States and the rest of the world to technology workers. And
so
many
we're talking
places
about
aren't
Seattle,
ready for it.
Portland. What's the data telling you?
Well, 13% of the people who are buying homes through Redfin in Portland started their search in the Bay Area. 6% of the people who are buying homes in Seattle started their search in the Bay Area. So people who live here are moving. And at one point we looked at this and we thought, well, maybe they're just looking, daydreaming of a different home or a second home. And now we see that they're actually moving.
So what's happening in San Francisco? Is demand cooling here?
Demand is still fairly strong. There's just not enough homes, and there are not going to be enough homes next year or the year after that or the year after that. They're just not able to build single-family homes in the city anymore, and yet you keep having more money coming into the city, more technology companies starting here and flourishing here. So the city just hasn't planned for it. They haven't zoned for it. They haven't built for it. And to some extent, we put our head in the sand when we could have been building lots of new developments. We've been anti-growth and said, no, we want to keep this jewel of a city the way that it is, and that just isn't going to work.
So what about prices? Can prices continue to rise here?
It's so hard to say. I think they have to. As long as the market keeps roaring along and as long as people can sell their stock for more money this year than they could last year, you're going to see prices go up.
Last time you said it's definitely a bubble. What do you say now? Where is this headed?
If I was nervous last time, I'm more nervous this time. I think that...
So it's still a bubble?
It's still a bubble in valuations and technology valuations. You're going to see some of those come down. And then when you see those come down, I think you're going to see prices flatten. They could still go up.
You mean housing prices?
Housing prices, excuse me. They could still go up. They could be flat. They ain't going down.
All right. Glenn Kelman, CEO of Redfin. Always great to have you here on the show. Thanks so much for stopping by. Coming up, we're going to be talking about immigration. Mark Zuckerberg's Forward U.S. taking on Donald Trump. We'll hear from the organization's president next. It is time now for the Daily Bite, one number that tells a whole lot. And today's number is 27 million. A Las Vegas man, Sanford Wallace, also known as the Spam King, has pleaded guilty to fraud and criminal contempt for sending more than 27 million unwanted messages to Facebook users. Wallace admitted to unlawfully accessing more than 500,000 accounts in 2008 and 2009, but he's apparently been annoying consumers since the 90s, sending junk faxes which violated laws enacted in 1991. Since then, he's racked up lawsuits for email spamming, spyware scams, and MySpace phishing. Wallace now faces up to 3 years in jail and a $250,000 fine when he's sentenced in December. Well, tech may be taking on Trump. Mark Zuckerberg's Forward U.S. attacked Donald Trump's immigration reform proposal last week in a statement that called mass deportation absurd. The organization's president, Todd Schulte, joins me now from Washington with more. So why now, Todd? Why take on Trump now?
Well, I think with immigration reform in the news and with a lot of false information out there, we thought it's a great time to remind people of the incredible role that immigrants play and why we need to fix our broken immigration reform system. And that means sensible security provisions. It means having an immigration system that works for today's economy. And it means for the 11 million undocumented immigrants who are here, giving them the ability to go through a background check and come out and get legal status and a pathway to citizenship. And, the time to do that is now.
Okay, so you've said Trump and Scott Walker don't have the best stance on immigration, but what candidates do you like? Who's doing it right?
Well, let me pause. When you say they don't have the best stance, let's say exactly what it is. When you talk about rounding up and forcibly deporting 12 million people, that's creating a police state. That's costing, according to a political conservative think tank, $600 billion. That's not just not being good on immigration reform. That's against American values. So I think it's really important to put a pin in that and say, this isn't about arguing at the margins here. This is to say, we believe that we're not going to go and do this horrible thing that's being proposed.
Okay, so what candidates do you like? Who's closest to what you want?
Well, I think there's a number of candidates on both sides of the aisle who, on this basic question that I want to talk about today, which is, are we really going to round up 11 million people? Are we going to say that we think we should radically restrict the ability of the United States to have the best and the brightest come here? If you look at both sides of the aisle, you'll see people who are doing great in the polls, people who aren't doing great in the polls, who are in favor of that. But this baseline question here is, I think, a really important one. And you see that on the Democratic side, somebody like Secretary Clinton. You look on the Republican side, you see someone like Lindsey Graham. You look at somebody like Governor Bush. These are people who are all willing to say the obvious to us, which is the idea that we're going to round up these people is just plain wrong.
Okay. Quickly, Todd, how involved is Mark Zuckerberg at this point? How often does he check in with you? What does he want?
Well, Marc is obviously one of our really high-profile founders. He's really passionate about this issue. What I'm really excited about it for it is, we actually just crossed over having 405,000 different people speak out in favor of immigration reform, to contact their member of Congress in support of immigration reform. Every day we don't pass immigration reform costs our economy $37 million. It's hurting the technology industry. It's hurting families. And so every day we go along is just, we're getting stronger.
All right. Well, certainly the issue will continue to divide the campaigns. I'm sure. Todd Schulte, forward U.S. President, thanks so much for joining us. And thank you all for watching us. Do not miss Donald Trump on Bloomberg Television tomorrow. He'll be on All Due Respect.